Merry Christmas and welcome back to the channel. And by the way, Happy New Year in advance. It is not an overstatement to say cryptocurrencies and blockchain tech is set to disrupt the financial world. And the concept of Defy, a decentralized finance system, is a key player. It has introduced a paradigm shift in the financial services, and the phenomenon is becoming inevitable by the day. The question is, what is DeFi? And why DeFi? What problem will it solve that the traditional banking system lacks, and how? Stay tuned. I carry out some diggings, research, and you will find the result very interesting. Grab a cuppa, of course a cup of tea, and then subscribe. So, what is DeFi? Decentralized finance, also known as DeFi, employs the use of cryptocurrency and blockchain technology to manage financial transactions. Essentially, it is designed to democratize finance, eliminate the middleman concept, which is centralization, replace it with decentralization, and then create a peer-to-peer transaction on blockchain technology. Wow. Okay, wait. Let's say you are curious, just like many who argue and say Bitcoin is also decentralized, meaning it is not controlled by a central authority. It is a peer-to-peer transaction, and it's also secured on blockchain tech. Well, to inform you, I also thought as much. Hence, I was eager and determined to know the differences. Why and how DeFi transcend beyond the limitation of Bitcoin. Stay tuned, I have some answers. Meanwhile, aside from transfer of money, which of course Bitcoin has been able to achieve, there are other services we use today that Bitcoin is not created to perform, like lending, borrowing, trading derivatives, and insurance. And this is when and how DeFi steps in. And I think you like to know how. No worries, I got your back. You see, you and I know that for the past decades, all our financial activities are centralized. The stock market, banks, insurance companies, and other similar financial institutions always have a central authority where our decisions are taken and carried out because they are in control, more so because the system is centralized. For clarity, let me break it down further. You see, before this supposed disrupt technology, virtually everything is controlled by the central authority, ranging from banking, lending, stocks, insurance. All are managed by the government, who are the gatekeepers. For instance, in the US, the regulatory bodies like the Federal Reserve and Security and Exchange Commission set the rules for the world of centralized financial institutions and brokerages, and Congress amend the rules over time. Okay, now, so what is wrong with the process of centralization? Good question. You see, to get funding in the form of loan and mortgages, etc., you and I would have to go through the financial institution like banks, exchanges, the middlemen, so to speak. Okay, what is the problem with the middlemen? You see, these middlemen charge you and me, meaning they earn a percentage of every financial and banking transaction as profit. In effect, we all have to pay to play. And now, DeFi is set out to disrupt the financial system. DeFi challenges the centralized financial system by disempowering middlemen and gatekeepers, thereby empowering everyday people like you and me via peer-to-peer exchanges. Okay, now let us examine DeFi financial services strategy. Alright, you see, DeFi employs and use blockchain technology. Yes, you heard me, blockchain technology, to administer and record transaction in a public ledger. What you are looking at. Okay, why is this process unique? Well, nobody has central power over transactions or balances, Why? Because the public ledger is a system in which transactions are verified not by the central authority but by the participant of the blockchain, and nobody can alter it or seek and earn any percentage as profit. And to inform you, and of course I believe you know, that the central system is associated with fraud. Yes, you heard me very well. The system is insecure. However, DeFi uses a secured blockchain tech embedded in a secure ledger. It provides users with anonymity, verification of payment at a faster speed, cheap, and nearly impossible to alter by fraudulent activity. Okay, time for tea break. Just sip your tea. Okay, now we're back. Let me quickly tell you one advantage of DeFi finance. Stay with me. Here's a good example. Let's say you put your money in a savings account to earn an interest rate of 0.50% interest rate on your money. The bank then turns around and lends the money to another customer at 3.5% interest and pocket the 3% profit. With DeFi, people lend their savings directly to others, cutting out the 3% profit loss and earning the full 3.5% return on their money. This is just an example. Stay tuned for more. Now let us examine why the concept of DeFi has now become relevant. Or let's say, what problem does DeFi solve today? Okay, now you see, you and I know the government has the power to print more money as they deem fit. They have done so and continue to do so. They call it quantitative easing. Consequently, the fiat money is losing its ability to function effectively in our global economy, and this leads to inflation, or at worst, hyperinflation, which means your money and my money will be devalued and wipe out our savings. Okay, now, whereas with DeFi crypto, the government cannot simply decide to increase the money supply. Not possible. They are not in control. And with the central authority, both institution and government can impose restriction on citizens as they deem fit. Well. DeFi crypto solves all this problem by removing centralized authority from the equation. Hence, no authority can freeze or seize your funds. And through DeFi lendings, users can lend out cryptocurrency as traditional bank does with fiat currency and earn interest as a lender. Besides, with DeFi, interest rates are more attractive than the traditional banks. And to inform you, DeFi leverage the power of blockchain technology and decentralization to build a more secure, faster, cheap, and reliable financial system. And it is permissionless and censorship resistance. That said, let us examine how DeFi leverage the power of blockchain tech and decentralization to create a DeFi system. Okay, here's the key. To create a DeFi financial system, you need a platform for writing and developing decentralized program or decentralized infrastructure, if you like. Please listen to this. This is when and how Ethereum become very relevant and inevitable. Why? Because Ethereum comes in handy when writing decentralized programs known as decentralized app, DApps. What am I trying to say? You see, Ethereum is an enabler, programmable, embedded with smart contracts, which allows you to write automated codes. And the smart contract manages any or all financial contracts anybody wants to create with DeFi platform in a decentralized format. Essentially, this decentralized infrastructure is the groundwork for creating a decentralized app. With this, we can build a robust DeFi financial system. Alright, for now, let us stop here because the financial technical terms can be very confusing. Otherwise, I can go on and go on. But I am convinced you got the picture. Moving on, let us examine how to get involved with DeFi. Just bear with me, let me bring it up. How do you get involved with DeFi? Alright, simple. I'm going to read from expert. Get a crypto wallet, and I quote, starting by setting up a Ethereum wallet like the MetaMask, then funding it with Ethereum. Say Cosmos, self-custody wallet are your ticket to the world of DeFi. But make sure to save your public and private keys. Lose these and you won't be able to get back into your wallet. Wow. And it's also say trade digital asset. Please take your time. I'm going to leave the link below. Take your time and read it. Alright, now, what is the future? Let's just examine the future of DeFi. Again, I'm also reading from the expert. You see, from taking out the middlemen to turning basketball chips into digital asset with monetary value, DeFi future looks bright. That's why people like Simariam, head of financial relation at IOTA Foundation, said a DeFi research and development groups see both the promise and potential of DeFi as far-reaching, even though it's still in the infancy of its capabilities. Like I said, go ahead and read it. I'm going to leave the link below. Okay, now, what are the risks? It's essential we look at the risks associated or embedded in this financial instrument. Well, no consumer protection. DeFi has thrived in the absence of rules and regulation, but this also means users may have little resource should a transaction go foul. Again, hackers are a threat. While a blockchain may be nearly impossible to alter, other aspects of DeFi are at large risk of being hacked, which can lead to fund theft or loss. Okay, now, collateralization. A collateral is a thing of value and used to secure a loan. When you get a mortgage, for instance, the loan is collateralized by the home you are buying. Nearly all DeFi lending transactions require collateral equal at the least equal to at least 100% of the value of the loan. Wow. Private keys. This is key. With DeFi and cryptocurrency, you must secure the wallet used to store your crypto asset. Wallet are secure with private keys, which are long, unique codes known only to the owner of the wallet. If you lose a private key, you lose access to your phone. Wow. There's no way to recover a lost private key. Alright, you've had it. That said, what is your opinion about DeFi? Can you see DeFi taking over from banks? I'd like to hear from you. But in my opinion, finger crossed. Okay, now, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and then create jobs. Bye now. See you soon.